All right, folks, my next guest notes that the recent weakness in AI stocks has investors worried, but she says she does not believe that we are yet at the end of the AI cycle. I'm going to bring in now Essex Investment Management co-CEO Nancy Prial. And Nancy, you share with us the list of the positives and the negatives in the AI trade.
Right.
And right now it feels like maybe the negatives are outweighing the positives. But does it boil down to just typical anxiety thrown in with a few articles here, the OpenAI questions, that thing from MIT, you know,
right.
all these little things. We were already kind of anxious because of the big move it made.
Absolutely. We think that's exactly what we're seeing is we have a market that recognizes that there's a lot of excitement about AI. There certainly is a lot of investment in AI. And we are seeing that venture capital spending and new company formation going up. So the market is on kind of a, the edge of its seat, waiting to see the signs of this bubble. We think the market is way, way premature, though, in looking for the end of the AI trade and for the bubble, if you will, to burst because we're still very, very early in the deployment, both on the building out of the data centers and then the use cases, which are just starting. This is a growth scare like we had in January, and we think that it will not play out into anything more than that.
Yeah, I'm with you. Let's shift to the economy because really amazing. Economic surprises are edging higher, which it's hard to believe that because of the headlines we see. But if we break this down, right, between hard data and so-called soft data, then we can see the difference. Hard data has really been pretty robust, if you will. It's been the soft data, the surveys that keeps going lower. With this as the backdrop, what do you think about the Fed, what they're doing and what they should be doing?
So we think that the Fed today is actually doing the right thing. We can discuss what we thought about what they did before, but today they're focusing on the data. We think they actually are focusing on the hard data as opposed to the soft data. And so they don't want to overstimulate the economy here. The economy has shown not only are we seeing good capital spending growth, accelerating GDP growth, but that rates where they are today are not an impediment to growth in most sectors. We do think that the Fed is likely to ease by 25 basis points in September because they've telegraphed that. But we think they'll go very slowly after that and will really they'll want to see much weaker data before they do a lot more.
So then you're overall for the rest of the year, the market, where do you see it going?
We think that the market has great potential for the rest of the year. We're having this little kerfuffle right now of concern with the market maybe backing and filling a little bit. But we think that earnings growth and revenue growth is what's going to take this market to the next leg. It's not multiple expansion broadly because the multiples are reasonably high. But as we have this accelerating GDP growth and particularly this capital spending-led growth, which has a much bigger multiplier than consumer spending growth, as that feeds into the economy, we should see both rising revenues and really strong earnings. We also are hopefully getting close to the point where we really see some of those productivity increases from AI that will help drive margins up.
I love kerfuffle. See, I can't say it. I get nervous when I say it because it sounds like I'm cursing or something. All right, we don't have a lot of time, but everyone's coming on with utility ideas, the data center, the power needs. And you gave two names that really I don't think are they're not household names, but I don't hear about them a lot. I want to start off with Worthington. WOR is a symbol.
Yeah. Yeah, so Worthington Industries, it's a spin-off from Worthington Steel. They split the company in two pieces, so this is not the steel manufacturing piece. Rather, they're a manufacturer, and there is a little bit of data center in here, manufacturer of HVAC equipment, as well as a number of consumer-oriented goods. Think about things like Coleman stoves and backdoor outdoor equipment. What we really like about Worthington, beyond the fact that it's a spin-out, which is generally a good way to invest, is that 80% of their manufacturing is done in the United States. So they actually could be a tariff beneficiary. In addition, consumer spending could be picking up, particularly in the DIY areas.
Nancy, thank you so very much.